Hey, what's going on, everybody? In today's video, I wanted to go over some of the call it hidden costs or things that you may not traditionally consider when you are saving and or preparing to purchase, whether it's your first home or your next home, just whatever the case may be, the concept being that we're purchasing property. So starting from the top, just a couple things I'm going to try to take it in order as best I can. I'm picking up from the perspective that you have found the property or the home that you are interested in purchasing. What's going to be the very next thing that you're going to have to budget for or consider? That very first thing traditionally is going to be the concept of earnest money. Now, this may not be applicable in your state or in your area, but here in the Cincinnati and Dayton, Ohio area, it's a very common traditional practice that you would be depositing what's called earnest money. Earnest money is also called show of good faith money. It is just the concept that you are putting some skin in the game in this transaction and showing the potential seller of the property that you are very serious about moving forward with your offer, and that such as you are making this deposit into a escrow account usually held with the title company that's involved in the transaction, or in this case, like if I were helping you in this capacity, we would deposit it with my brokerage. Either way, it's a deposit that you were usually making within the first 3 days of your offer being accepted. That's like general practice. It could be more, it could be less. It just depends on what's agreed upon by both sides. And there's not a set amount here, but generally speaking, you might hear of a couple different guidelines given. Sometimes you'll hear 1%. So to use a simple, analogy, if you were buying $100,000 property, you might hear of a 1%, scenario. In that case, you're putting down $1,000 into that escrow account, again, held with the title company or that buyer brokerage that you're working with. But that's just a general guideline. This will be what's actually nice about the earnest money, though, is that it's not just money that, gets put away and then is not used again. It actually will go back to you as a credit at the time of closing. Meaning, let's stick to that same example. If you put down $1,000, it actually will be used as a credit, meaning you'll have 1,000 less dollars that you will be paying out at the time of closing. So that's traditionally what it's used for. There's a little bit of nuance and consideration there, and I could cover that on another video, or I could cover that with you more in depth in person. But just for the sake of budgeting and today's concept in today's video, earnest money usually is that first thing up front. Again, 1% might be a safe bet on planning purposes. After the earnest money deposit, usually that next thing right off the bat is going to be call it your due diligence and or inspection period if you're doing an inspection, which I would highly advise you do. If you're going to be doing just a general inspection, depending on who you're going with, it might be anywhere from $400 to $600 for the general inspection that's going to cover most of the bases. If you opt to do some call add-on services, like let's say, for example, you want to do a sewer scope or you're going to do a termite report, any of those kind of call add-on realms could, tack onto that cost. Generally speaking, though, the general inspection is going to be between $400 to $600, and you're usually going to be doing that within the first week of your offer being accepted. And that's usually called the first major obstacle or hurdle in the transaction. If you also do the general inspection and then you have to have more specialized, let's say, for example, you need an electrician to come out to the property or a roofer to come out to the property, anyone that needs to do a second, more specialized opinion, that also could come with a cost. Usually they call that like a trip charge. Usually you're just paying for that person's services to go out there and provide that quote for you. Sometimes that'll be free. Sometimes they'll have a cost. It just depends on the vendor and the service that you're using. But generally speaking, so far we've talked about earnest money and your inspection. The next major consideration when you're buying, if you're going to be financing, is going to be the appraisal. So the appraisal is typically, this is going to be you working with your lender. And this is something that you are going to be paying for because it is your appraisal. You actually will be getting the report on this. And this is the bank verifying what they think the property is worth. So ultimately, if you, let's stick to that same example, you're buying that $100,000 property. In that scenario, you're paying usually about $500. It depends on the lender, but that's a safe bet. There's upfront to pay for the appraiser to go out and perform their report on what they think the property is worth. Now, ultimately, like I said, this is going to be your report, so you actually will be delivered a copy of this. Sometimes they'll do that electronically. Sometimes they'll do that physically. You'll get a paper copy of it at closing. But that is done for the bank's verification to ensure that the purchase price that you're buying the property at is agreeable to the lender. They want to make sure that the appraised amount matches what you're shooting to buy the property for. So again, so far we've covered earnest money, we've covered inspection slash due diligence period, and we've covered the appraisal. So those three things are usually the main, call it like under contract considerations before you've purchased the property. The next thing you got to consider is the actual closing costs and your down payment, right? You've probably already factored in what your down payment your savings is going to be. And so that's not going to be something that's called hidden. But the other consideration at the time of actually signing the closing documents and usually getting the keys to the purchase is going to be the closing costs with your lender. Now, this is where it's going to vary greatly, and it just depends on what lender you're working with. Everyone has different costs. The other term you might hear in this realm is like origination fees or origination costs. The way to consider this is that the lender is creating a new loan for you. You are purchasing the property and a new loan is being created. And so it is the fees and costs associated with the creation of that new loan. Sometimes they'll lump that all together as just one lump sum amount. Sometimes they'll break that down by a line itemized breakdown of, you might see like underwriting costs or, like I said, origination fees. There's different verbiage that they'll use depending on your lender, but that is going to be something that's going to be disclosed to you well in advance. You will actually get right off the bat, you will get these disclosures along the way, and these will provide you an overview and estimates of what those costs are going to be. So you will have a working understanding of what those numbers are. But just so that way, if you're at the very beginning of the process, this is something that you should account for. I hate to even give you a general rule of thumb in this capacity because the costs vary dramatically. But what I would encourage you to do is to shop around and to see who can offer you the best terms and the best prices and considerations. But I'll do consider that there will be costs involved with the creation of that new loan. So that kind of gets us all the way up to, from the financing perspective, all the way through to the closing table. Just the one last thing in this arena, in this bucket to consider is the title company. When you are purchasing the property, the title company is who's going to be responsible in getting all of the, what they call the deed prepared. They're going to get everything prepared with the county and with the state to go into your name. And so there's usually the costs and services to have that, prepared and documented. This one's usually not too hateful. Usually this is just a couple $100 and it's again paid out at closing. But it is just something to consider, and it depends on the title company that is being used. Generally, again, it might be anywhere from $200 to $500. It just depends on the scope of services that you're having the title company do. But usually it's a pretty fair price. So that gets you all the way through to the closing. Now, just consider afterward that you do need to be mindful of a couple other things. One of those, and this is probably the most under considered cost of home ownership, is going to be your property taxes. So on the front end, when you are searching for homes, one thing that'd be very wise is to take a look at what the property tax rate is for the area that you're looking to move into. Because here in Ohio, there's a huge spectrum and it's a widespread. Not all counties are created equal. Everybody has different rates. But this property tax consideration is something that's very important. Usually you're going to be paying that if you have if you're financing the property. Usually your lender is going to set up an escrow account, meaning that every time you make your house payment, there's going to be a certain percentage of that that's going to go into an account that will ultimately be used to pay out those property taxes on a recurring basis. Usually that's every 6 months. But not all lenders do that. So, you do need to confirm with your lender and just ensure that you're saving or accounting for those considerations. But year over year, we've had some pretty big increases in those property taxes. There's not again like a general guideline I can give you here. It varies greatly depending on the county that you're in. Usually there's a consideration that the higher the property taxes in the area, most of the time here in Ohio, we're using that to fund the school district in some capacity. So generally considering if it's a high property tax area, usually that means the schools are being pretty well funded. But again, that's not all created equal and requires a little bit of your due diligence on that part. So that's after you've taken over the property and you're making those monthly payments. That's something to be considered for sure. Otherwise, it's a lot of other things that you may consider, but just, for your budgeting purposes, if this is your first time doing it, Just don't forget about your things like your utilities and your internet costs. Those are obviously going to vary depending on where you're at, who your provider is, and how much you use those services. Then, other than that, just consider maintenance. During your inspection period, you will have done a lot of due diligence and you will have been provided a pretty comprehensive overview of the condition of the property that you're looking to purchase. There's going to be what's called deferred maintenance on your property. So let's take, for example, you're purchasing a house. The house has a roof that's about 15 years old. That would be right about the middle of what they would call like the expected life of a roof, depending on what kind of roof is installed on the property. In that case, just need to be mindful that probably during your ownership, you're going to have to replace the roof once it eventually fails, right? Usually manifests into something like the roof leaks and, like there's water that comes in, you'll see those water spots on the ceiling or something along those lines. But you just need to take into consideration that you're going to have those deferred maintenance costs. There's not a good rule of thumb on this one either. You can use a couple of different calculators and ultimately like some budget, considerations as far as how much to save on call it like an annual basis for that. But just generally speaking, just know that while you're owning the property, you're going to need to do maintenance around the house. And that's just something that you should be saving for on an annual basis. So all of those considerations are just things that you should just keep in mind while you're purchasing a house. If I could be of any help and service to you in getting an idea of how this fits into your budget, what you need to be accounting for, and if you need more guidance and resources on how we can make this happen for you, I would love to be of help and service to you. Again, my name is Trevor. I'm a real estate professional here in the Cincinnati and Dayton, Ohio area. You're welcome to text me. My cell phone number is 937-888-2099. I would love to be of help and service to you. But otherwise, if this is helpful for you, please do let me know. I want to make these videos of value and of use to you. So please, drop a comment, text me, let me know what your thoughts are if you have any questions, and I will catch you on the next one.